I don't know about you guys, but for me, a game is 10 times more exciting when I'm putting money on it. Sometimes I have a gut feeling about a matchup, sometimes I'm just betting on my team because I like them. Regardless, whether you're betting for years or you're brand new to it, my bookie is your best bet this season. If you're the kind of guy who likes to bet a little and win a lot, try a parlay. You can pick multiple teams for a much bigger payout. If you're going to bet this season, do the smart thing and go to mybookie.ag. Between football season, the MLB playoffs, and the start of the NBA and NHL seasons, there is no better time to get off the sidelines and get in the action. This is the absolute best part of the sports year, and nothing makes it more entertaining than having some action on the games. If you use the promo code CryptoStreet, one word, they will double your first deposit. Visit mybookie.ag today. You play, you win, you get paid.
Ladies and gentlemen, welcome to the main event.
Let's go.
Round one. Fight.
Thank you for tuning in to the Crypto Street Podcast. Here are your hosts, Killer Whale, Prince, and Crypto Dale.
And remember to tip your waitress.
Hello. Welcome, everybody, to the latest episode of the Crypto Street Podcast. Happy to be here. Happy to have all you joining us. Our guest today, we'll get right into it, is Jake Ryan, the founder and managing partner of Tradecraft Capital, which is a crypto-focused fund. I think he's done a lot of really cool work, especially on fundamental analysis of crypto networks. So a lot of really good information here. Looking forward to picking your brain. Thanks for joining us, and how you doing today?
Hey guys, how's it going?
It's going good.
Man.
I'm excited.
Yeah. So we're gonna get right into it. So your kind of overarching thesis, I guess, relates to kind of a new phase in the economy that you refer to as the Age of Autonomy. So that's going to kind of lead us down a path where we analyze everything else that you write about and talk about. But give people an overview of that thesis just to start off with, so we have kind of a big picture view of where we're going.
Yeah, very good. So yeah, the thesis is based on 100 years of proven economic theory. And that's that short wave economic cycles are driven by credit, but the long wave economic cycles are driven by technological revolution. And I think we're entering a new age, and what I'm going to call the age of autonomy. In the past 200 years, we've gone through 5 other big cycles. The first one was the Industrial Revolution. The second one was railways and steam. The third one was electricity. The fourth one was oil and automobiles. The fifth one was the age of information with the internet. And I think we're entering a new one with the age of autonomy. I think over the last decade, AI, IoT, and robotics have been delivering on automation. And that's been valuable, but it hasn't been transformational. And I think the last piece of the puzzle is cryptocurrency, because it allows us to store and transfer value without the need of human intervention. And so businesses are going to be forced to reconstitute themselves in how they do business. Businesses that don't have autonomous operations just simply won't be able to compete with those that do. Because autonomy really is the ultimate competitive advantage. And so at our fund, the goal is to invest in crypto assets that help and support that vision of autonomy.
Cool. So when you say certain assets, I don't know if you can disclose this, but are there any that you like more than others that you guys are looking at, or that kind of fit into this thesis more than others?
Yeah, I mean, this is a 50-year cycle, so this is going to happen over many decades. I think first, I break down crypto asset classes. Just Google crypto asset classes, and I break it down to 7 to 9 different crypto asset classes. Reserve assets, platforms, cryptocurrencies, governance tokens, things like that. So, based with this theme, with this thesis, we have 3 investment themes. The first theme is sound money, and it really goes to the idea that fiat currencies and global central banks, with their race to the bottom, are really devaluing their currency in an effort to jumpstart their economies. And that's destroying the financial system and currencies as a store of value. So Bitcoin specifically could be an insurance policy against, quantitative easing and the greatest monetary social experiment in history. So one of the themes is sound money. That's probably the one people are most familiar with Bitcoin. That's the one that's done well in 2019. And I think, as we know as crypto investors, typically Bitcoin has to do well before any of the other crypto assets do well. So, that's one of the first themes. One of the second themes is autonomous contracts. And so, the idea of smart contract platforms, as we all know them to be, will be a second theme that comes on most likely in 2020. We have Ethereum 2.0 coming out in various phases over the next 2 or 3 years with what it is. We've got a bunch of contenders and all of them fighting, a platform wars for, who, either one or a few of them, that are going to house, generate, and maintain, the business set of autonomous contracts for the future. So I think that's one big theme as well. And then decentralized governance. Ultimately, as these crypto assets become more valuable, the rights to govern these will become more valuable. And so, DAOs, governance contracts, systems that think about governance and have decentralized governance, I think will be an important theme, going forward.
I'm curious, what's your take on privacy coins? Now, this is an area that it often gets a lot of attention, but even when things can be really performing hot, sometimes I remember just seeing privacy coins, they would almost underperform at times. I'm curious, what's your take on those? Because I noticed you didn't mention those, that, you had the sound money platforms, governance, but privacy is an interesting area. What's your take on that?
Yeah, I come from the computer science background and building custom software, and I would say, privacy is a feature, not a product. Ultimately, most of the privacy coins as they are today are great ideas, very important, have good technologies, but ultimately probably aren't platforms that will sustain value in the long term. I think one thing, we learned, or I learned, especially in 2018, was, projects that create value aren't necessarily the projects that accrue value. And so it becomes really important to look at tokenomics, monetary policy, and ultimately the entire crypto asset as a whole to see if it is something that would accrue value over time. And so most of the privacy coins that I see out in the market today, I just don't think will last, though they have some great ideas.
What do you think their main downfall will be? You think there's not really that much of a need for them, or is it maybe like regulatory concerns where there's not enough liquidity?
Yeah, I think it's a couple things. Some of the privacy coins I really like, but they have terrible monetary policy. So they're just issuing, the inflation rate and their issuance rate is just way too high relative to their usage for them to be able to accrue any value. Some of them, some of the main issues, like I love zero knowledge proofs. I love everything that Zcash has and the entire team does. They've built, some network effect. There are some people using Zcash, and I think probably Monero is the one that's used the most. But I think, network effects and the network built are going to generate a lot more value than the technology. And so it'll be really easy for, other projects that have built a good platform, a good governance model, and then, have a good community and a good network to just add that as a feature and steamroll anybody that has good technology but doesn't have a big enough network.
Yeah, I think it's in my mind, it's like with privacy coins. I think I do agree that the technology is pretty easy. Like it's not patented, right? It's not proprietary. You can add it to almost any chain, I think, if you have developers who are smart enough. But I do think there's like some value to like certain chains that are private from the start, because I think some that add it later on, they have holes in the form of like public transactions beforehand that you can use to unravel the rest of it. So I gotta think there is a market for just like a pure privacy coin. And I don't know how big that gets from there, but that's kind of been my thoughts on it.
Yeah, I agree. I mean, you got to have it at the core. I mean, this isn't just about, person to person, usage. And I mean, Apple doesn't want anybody to be able to figure out what they're what they're buying in terms of their supply chain. So yeah, privacy is going to be so critical. And if we don't get that sorted out and really have that as a core of our blockchains, we're going to have an issue, I think. So I mean, I definitely agree with that.
I'm curious now to take a turn from privacy coins to now another class that you did not mention, but has gotten a lot of hype in the past, thanks to Binance. What's your take on exchange tokens?
Yeah, so I mean, I like exchange tokens. I like them because they have a good good tokenomics. The idea of generating cash and then using that cash to burn off tokens, right? To decrease the supply. I really like that. The main issue I see right now is I think centralized, unregulated exchanges will go away in 3 to 5 years, and we'll either have centralized regulated exchanges or DEXs, that go about custody and about trading in a clever way to mitigate regulatory risk. So, but I like them. I like them now, and I like them in the future. So it's just, I think right now, like for example, Binance, in the U.S. they've halted U.S. usage for a while until they come back online. So that's probably killed some of the trading fees for them, though. I don't know. What other ones do you guys like that you're holding or looking at?
Oh gosh, I don't actually really hold many tokens. Like I'm I used to, and then I think as most people have just gotten burnt, it's like one day you just decide, okay, enough is enough. Maybe I'll just chill out with this for a bit, and I'm just gonna stick to good old Bitcoin.
Yeah.
But we're doing kind of a fantasy portfolio thing, and so say I took, it was just 3 exchange tokens: Huobi token, FTX token, and then it was Leo for Bitfinex.
Right.
And it's interesting to watch their performance, because I keep an eye on them. I don't watch it all the time, but they move in their own separate, sporadic ways, I find. Whereas sometimes you can lump alts as a whole together, but it's almost best sometimes to take exchange tokens into their own little category at times.
Yeah, I think that's right too. And I think they've got, lower correlation to Bitcoin. I'd have to look. So, that makes it good to help diversifying a crypto portfolio. So
that was probably the biggest thing I noticed when when I was initially holding Leo. I ended up getting stopped out of that position, but for a time it was actually counter, like when Bitcoin would dump, it would pump or it would stay flat. It was usually, if it was going to dump, it was going to be on a green day for Bitcoin. And it was like, okay, this is interesting. You don't see this around everywhere. So the correlation, it is intriguing for me to watch.
The concept of decentralized exchanges is always like a fascinating one to me, because I think it's currently like this big pie in the sky thing where it's like the ultimate in trading any of these kinds of assets, because it obviously it helps with a lot of things that people value a lot, like identity, privacy. You can do your own thing without fearing, custody risk or something like that. And it's been attempted quite a few times, different decentralized exchanges, but it hasn't really been done well so far, I don't think. I mean, certain efforts have done pretty well, but it hasn't really done well enough to where they become actual things. I think most of them have devolved into basically just low liquidity, mock centralized exchanges where they're like a little bit decentralized, but they might as well not be. Maybe you have custody, but you still have the KYC or. And I wonder what it's going to take to actually see like a really good option in that space.
I think I think, when the regulation comes out and then they really start to force people to either, go to regulated exchanges, or they provide this option, that may be the kick in the pants. The other thing is, we haven't really seen any programmatic money, like the real autonomous or smart contracts, or the idea of programmatic money expressed yet. And so in the coming years, when you're able to, you have a real established DeFi platform and you're able to then start using these building blocks to compound into something more complex, and you're able to, have code that is going out and doing trades on dexes and coming back and doing more complex financial transactions, I think that's where it's going to get more interesting. I mean, right now it's a commodity business and the biggest pool of liquidity is going to win. And a lot of these dexes just, they don't, or, but some of them have, done okay. But yeah, I mean, it's hard because we're getting compressed fees that they're making. And so there's definitely trouble.
I think the craziest part to me is just and I guess I shouldn't even be surprised, but you'll have a DEX that'll come out, people get hyped up, it'll be a great platform to use, and then all of a sudden they'll hit you with the, hey, if you want to keep using our platform, you got a KYC now. And this is like what I think the newest one to do this was Crypto Bridge, if I'm not mistaken.
Just recently.
They
didn't have a choice, really, I don't think.
Yeah.
IDEX had to do that too.
And you seen what was it? The creator of like Ether Delta or something ended up paying a fine or something like that around, that kind of thing. And so it is interesting to see, like how is the DEX development actually going to be going forward? Because you can tell the government, they want to hit it and they're watching it with a pretty, focused eye. So that's another, like I love crypto and I think we're all in it because of, okay, where is it going to take us? Right. And DEXs are one that it's like, there's such a huge market for them, but it's just like, okay, who's going to get the one that can actually take off here and be its own life and its, in itself.
I know Coinbase bought one a while ago and it was interesting because I forgot the name of it, but they used different nomenclature. So it wasn't a DEX, it was a bulletin board,
Okay.
And it was like, they just used wording and nomenclature that made it, tried to obfuscate that it was, and I think that would probably help or be successful, but I don't know. We'll see where we go.
And I think it's going to be like a trial and error thing with DEXs where people have made good faith efforts, but they've done it in such a way where maybe the founders were too public, and the scrutiny gets to them really, really quickly in terms of abiding by regulations and things. But I think people are going to learn from that. Like I've got to imagine there's some developmental wizard, who's has the wheels turning in his head or her head, and is thinking there's a way to do this where you can do it in terms of like satisfying the needs of the users and not have to get killed by regulatory concerns. I don't know what that is, but I mean, Binance has been kind of on the fringe of regulatory, issues for quite some time, and they've managed to do it. They move jurisdictions, and I'm kind of surprised at how adeptly and how nimbly they've done it without actually getting crushed. I mean, they're starting to a little bit. They have to open up the U.S. one, but they've done it pretty well. And I think if you took that kind of strategy, like with a DEX, you could get it done.
I think so. Yeah, they were great, and they are great at regulatory arbitrage, right? I mean, they're just like, ninjas at that. So
Yeah.
I think it'll take some abstracting, right? We know that the government isn't going to go after code or developers. And so we're going to have to abstract, maybe have some software that does the core part and it's just software.
Yeah.
And then some some level where some entity starts taking the AML, KYC for each jurisdiction. I don't know. We'll see.
I think like scaling in general is going to be a big part of those too, because the ones I've used, like they work, but they're very clunky. They're kind of slow, and it's not the exchange experience where it's smooth and seamless that you want.
I remember my first time using Ether Delta. I thought I got completely lost. And I think that was at the time like the only real DEX out there when I was using it. I was lost. I thought I had lost all my coins. It was like, and then I just watched a YouTube video, figured it out, and it was like, wow, okay, this might be the coolest thing I've ever used before. After I finally figured it out.
Yeah, if you have to watch a video on how to use it though, I think it's an L. Like,
it was so fun though. It was like a video game. I mean, it was like trying to figure that out, and like that was fun.
Yeah,
those were the days.
Yeah. Those were, because everything was so novel then, you're like, this is some crazy like cyber world that I was like completely unaware of.
Yeah.
Jake, let's go back to Tradecraft for a second. When did you guys open, or when did you found it?
Yeah, so I started trading Bitcoin in 2016. I came more from the tech and West Coast venture and angel side of the universe, and so I was investing in some blockchain companies in 2015 and 16. And then I started Tradecraft in the very beginning of 2018. So, I got to start at the beginning of crypto winter.
Oh man.
So it was a lot of fun. Definitely trial by fire. So
that's almost like it's like, it's like, in the moment, it's like, God, this is just terrible, right? It's like the when the market's like that. But I feel like, as you go through it, in the end, it's like, okay, this is actually maybe like the best thing, because, your investors are going to like understand, like, okay, this is crypto. Like, you understand what you're getting into. And, I remember like just even some, family where it's like they get into crypto, but they got in before 18, right? So all they knew was the upside. And so then all of a sudden a lot of delusions come into play about how they're going to manage their money, how it has to act, how they expect their returns to go, and which this is crypto, it's not really realistic, right? Like, it's insanity out here sometimes.
Yeah, absolutely. It's kind of like when startups start in recessions, like in 2001 or 2009, that's actually a good time to start a startup, because, if you can survive in those economic downturns, and you can be bulletproof when things are good. So,
I think maybe the worst time would be like late 2017, where, they start off and the expectations just go sky high right off the bat. And then like just a couple months later, it's like, oh man, we're going to go down for 2 years.
Yeah, that probably would be worse, but this is a long-term play. We know we're into something early, and, it really, investment is about conviction. Like, the more you can read, the more you can really have conviction. That's the innovative, if you're going to invest in innovation, you've got to get conviction in that new thing before everybody else does. And so that's what we're trying to do here.
There's some quote, it's like, good investing means everyone agrees with you later. And
Right.
I think that's very apt. And I mean, we've gone through it just like with hosting this, where, I mean, I don't know if I speak for you, Prince, but like there have been certainly times in the past few months where I'm like, is all this just like going away? Like, I don't think so, but it certainly crosses your mind after 2 years of nothing but bearishness.
You do wonder at times. Well, at times it's just, you think to yourself, is this real? Like, is this going to keep kicking around? But it's I do think so. And that's the thing, I can't remember who said it. Is a VC of sorts, a very smart individual, and in his newsletter it was like, when something just refuses to die consistently, it's like you just have to take notice, right?
Yeah. Also, like, I mean, all the kids coming out of school, all the resources being put at this, all the people leaving, Goldman Sachs or, you know, Google or whatever to come into this sphere, to see all the investment dollars come from, the endowments of Yale and Harvard and Stanford, and to see, what all the really innovative venture capital firms are doing, like Andreessen Horowitz or, Union Square Ventures or any of those guys that really have meaningful crypto investments. I mean, I'm absolutely certain this is going to be revolutionary and here to stay.
On that note, you just said something where you think we're still pretty early in this whole thing. So I think it's good to jump over to, I think it's Carlota Perez. Perez has a chart called Technological Revolutions and Financial Capital, which is a chart that basically shows how new technologies, new revolutionary technologies are adopted and the different phases that they go through when they're growing. So from a recent article you wrote, it appears that you think we're pretty early on in this process. If you could explain a little bit about why you think that and what that means going forward.
Yeah, well, Carlota Perez is an economist. She worked on previous economists' work from the 1920s and 30s, Schumpeter and Kondratiev, who really had the ideas of these long wave economic cycles. And she started to build on their work in her book, Technological Revolutions and Financial Capital. It's one of the best books. I highly recommend it. It came out in like 99 or 2000. And in that book, she really lays out a case for that these technological revolutions happen in a similar way each time. And she breaks it into four phases. Kind of the first phase being the eruption phase, where there's this new technology and a great love affair and everybody's just trying to figure it out, to a second phase where it's called the frenzy phase. And what happens in this phase is there's a decoupling from price to value. And you start really seeing heavy investment, maybe not a lot of users, but a lot of investment. And you see things skyrocket from there in terms of usage and price. At some point in the middle of that phase, or at the end of that phase, we have a turning point and some sort of crash, and it's a major crash or a major bubble popping. And then we start a synergy phase, which is the third phase, and then we move on to maturity, which is the fourth and final phase. I still think we have just really gone out of the eruption phase, that first phase, and into the frenzy phase. And, some of the key points that I look at in the world of why I think that, even though we've had several bust and boom cycles within Bitcoin or crypto assets in general, are a few things. One, in the 2000 internet boom and bust, in that whole bubble, I think we had capital assets of something like 9 trillion in total. And that was really very US centric and very California, Silicon Valley centric. So I'm looking for the next revolution to be much bigger than that $9 trillion at the time of the bubble bursting. Again, these are also, 50 to 60 year cycles, and we've really finished about 10 years by my estimation. And so that matches up well with kind of starting the second phase, that frenzy phase. I also remember I went through the internet boom, and I had a computer science degree, and I was working in the dot-coms and in that time period. And I can remember like 3 or 4 big booms and busts within the 90s, until that final like big move in 98, 99. And so I think it's perfectly common to have those fits and starts and booms and busts all within that frenzy phase. And I don't think we have seen anywhere close to the size that this is going to be before we may not have, real user. I mean, we'll have users, but it won't be, we don't have to have meaningful usage and having, the iPhone, if I were to make a comparison, to have this really go well for investors. And so
The iPhone stage would almost be like the maturity phase in a
it'd be the
sense, right?
synergy. Yeah, it'd be the
Okay,
synergy
yeah,
phase, that third phase. And so,
right.
right now you see everything working. You see Google, you see, tons of that stuff in the synergy phase now of the internet cycle. But there were so many investments that went, so well during the synergy or the frenzy phase of the last cycle that I think we have a lot more coming in the next several years.
And I think if you compare it to the dot-com boom too, there's just a lot more money in the world right now. I mean, there are more people. This is almost 20 years after that bubble really crashed and, led to a flat decade in the markets. And I think they're all the ingredients for, and you mentioned the global thing, that's massive. Because like you said, I mean, people in India, I don't think we're not investing massively in the tech boom. Maybe some people who had a lot of
They
money
couldn't.
had exposure.
Yeah, they couldn't. They didn't have access to the U.S. Stock market, and so absolutely. And this phenomenon is global, and so I just see that this could be sets up itself to be a much bigger thing.
Yeah, absolutely. So, looking forward a little bit now, one of the things that I like about your content the most are these fundamental analysis indicators and ratios that you post about on Twitter and that you write about on Hacker Noon, Medium, et cetera, et cetera. And where are these? Or maybe we should start by kind of walking through some of these metrics and indicators that you use, and we'll kind of look at what that might mean going forward.
Yeah, so I mean, I like to use, we have a proprietary fundamental analysis framework. I published the public version of that, which has 9 total metrics. 4 of them are ratios and 5 of them are metrics. 2 of the ratios look at long-term relative valuation and 2 of the ratios look at current valuation. And so I just want to see price relative to value, how we're doing for the long term and currently. And then for the 5 indicators, I have 3 current indicators that I look at, and I have 2 directional indicators. The current indicators are really just that. They give me the current state. They're not leading or forward indicators. They give me, a viewpoint into how the networks are currently working, and then I use the directional indicators as a little bit more forward-looking. I wouldn't say they're necessarily leading indicators, but they give me the most time-sensitive view into the networks. And so, given those pictures with that and how those work, I think I get a good view into the Bitcoin network in particular, and then I use that to extrapolate a thesis for crypto asset investing as a whole. One thing I did in that article is then I take pictures of various dates of what the fundamental look like, and then you can see kind of what happened within the price chart later on. And so you can kind of see the decision making at the time of when the picture was taken, so to speak, of the dashboard, and then what happened afterwards.
So based on this, obviously in the markets, we'll talk about Bitcoin. We recently came out of that consolidation pattern that we were in for a few months to the downside, and we've kind of been muddling there for about a week or two. And what do these indicators show going forward, or where we might be in the cycle?
Yeah, so 2 weeks ago, we were having very constructive fundamental indicators. We were adding daily unique users or unique addresses. We were increasing in daily transaction value, and mining fees were within a good threshold. The directional indicators, I use correlation directional indicator and the NBT ratios direction to look, and all of those were positive or constructive a couple weeks ago. So the valuation ratios have been tough, and so the NBT ratio, which is kind of the crypto universe's PE ratio, what is very high right now. So it's showing overvalued that the Bitcoin network is overvalued, price relative to usage. And then the MV/RV ratio, which uses this concept of relative value. It gives a little bit different picture into, it has kind of a memory, it keeps a memory of when last transaction happened for each Bitcoin, was showing value. So those were a little bit conflicting. As of the last 5 days or so, we've really seen the metrics breaking down. And so I would take that to mean, ultimately, I think we have a very positive fundamental picture of Bitcoin and crypto assets, but something's going on in the macroeconomic world. Something's happening to risk assets. If you look at the macroeconomic world, it's really affecting all risk assets and all assets in general. We're having a dollar shortage. We're having all kinds of issues with the overnight repo market. We've had the Federal Reserve have to loan out to banks $275 billion with a B in 1 week because we're having a dollar shortage issue. And so I think overall we're having macro issues that are now affecting the crypto markets. And so in the last 5 days, you've seen a lot less activity. Unique addresses are falling, transaction values falling, and the mining fees. I think mining fees for Bitcoin network right now is averaging under 20 cents, which is not good. So,
you said for the mining fees, like I think when I was remembering that somewhere in the middle is usually like the most bullish, either too high or too low is bad, right?
Yeah, I want to see mining fees in general on average between 20 cents and $2. So if it's below 20 cents, that's bad. If it starts getting, above 10, 20, $20, that's not good either. So, so I kind of want to see that in between.
There's sort of like this prevailing narrative that a lot of people seem to have where a traditional market crash is going to be like the most bullish thing for crypto. What are your thoughts on that? Like, agree or disagree in your opinion?
Yeah, so there are two kinds of crashes. One would be good for crypto and one would be bad for crypto. So the one that's good for crypto is when we continue to see an erosion of trust in the credit markets. We continue to see erosion of trust with central banks, and we continue to see devaluations of currencies. So if the problem comes from the credit or currency world, I think that could set up a very interesting, very compelling, very constructive investment case for Bitcoin and for crypto as a whole. If the problem comes from anemic growth, global growth, issues with the economy and with growth, at this early stage, I think that would be still a problem for Bitcoin. I think, and crypto as a whole. Bitcoin is trading as a risk asset. It has for most of 2018 and 2019. Now we've started to see it oscillate between the market thinking it's a risk-on asset versus a risk-off asset. In July, we started to see Bitcoin much more correlated to the Swiss franc, to gold, and to other traditionally safe haven assets. And so it was starting to act more like a safe haven asset, a risk-off asset. And so that's exactly what I want to see. And so it will oscillate. Ultimately, I think in 5-10 years, Bitcoin, or some amount of time, Bitcoin will be seen as a safe haven asset. But for now, it's still a risk-on asset. And so it's still very much going to be affected by economic growth, things like that. We would have to be worried about that. So it really does depend on what kind of, recession or issue we have, whether that would be constructive for crypto or not.
I like that, and I don't think I've heard it broken down that succinctly and clearly. I think it's usually either people are on one side or the other, and I've kind of found myself on one side. But I think, like with a lot of things, the truth is probably more towards the middle of what both extremes think. So I think that's very interesting to think about. One thing I wanted to touch on, this is a little bit off topic fundamentals, but I wanted to touch on it earlier, is talking about smart contracts for a second. It seems like there are a few main players in that space. Do you see that, like most of the value in that space accruing to one dominant asset, like let's say Ethereum, or do you think it's going to be spread out among a few, where it'll be like kind of like an oligopoly a little bit?
I think it'll be an oligopoly. Ultimately, I mean, technology can win this, but ultimately, I think there's a trade-off. There is a fundamental physical trade-off between decentralization and being censorship resistant, and scaling and being, performant. There may be some technology that does deliver on those two and all three: security, censorship resistance, or decentralization, and secure scaling or performance. But there still is some sort of technical trade-off, I think, right now. And ultimately, I think it'll be an oligopoly. I think there will be a blockchain that's used for gaming, gambling, social networks, high transaction, front of office or high transaction throughput. There will be one that probably supports DeFi and all of the kind of back office, or not necessarily needing as much scaling or performance as it does need decentralization. I think, all of those will improve over time, but I do think there'll be 2 or 3 players, at least a couple players in that space.
Yeah,
there'll be a Coke, and there'll be a Pepsi.
yeah, I tend to agree too. I just think, certain chains are a little bit better at certain things than others. And I think, the other ones it's hard to imagine one just kind of taking over and being like, we do everything the best. I think that's hard to imagine.
Yeah. And I think really governance is going to play a big role. Who can, since these are decentralized, we have to organize around a vision and get a bunch of people headed all in the same direction, right? And blockchains and organizations that can do that fast and well through systems and processes are going to do much better than the ones who are, discord, disharmony, and do not have systems and processes for governance. And so I think ultimately that is going to be a very critical factor in who wins and who does well in those wars.
Yeah, and I think that's probably one of the hardest aspects to get right, because just look at how much discord and disagreement there is just among the public on pick an issue, pick a political issue or what have you. And to kind of design a system where it's like, oh, we got it all figured out. I think that's pretty tough. And I don't know what that's going to be. Maybe it's something we haven't even seen an example of yet.
I think governance is probably one of my favorite areas where it's like, okay, where is this going to go? Where is this going to lead us? And so it's interesting, right? Because Tezos, they got kind of a model set up for governance on their platform. And then Decred, I hope I'm saying it right, is another one.
Decred, yeah.
Yeah, Decred. There you go. There you go.
There it is, Decred.
Yeah, there you go. Those are the 2 that immediately come to my mind. And
Yep.
And, I've been watching those for a long time, and it's like, okay, this is price action and trading aside, these are 2 projects that I'm genuinely interested in, because I think, if they can pull that off, that's going to lead to, places that it's just like, holy crap, we couldn't even imagined how, this platform could have led to, this area because of governance.
I agree. And I think that, the Decred team is phenomenal. I think the first thing that they ratified was privacy. So I think the very first, feature, so to speak, that they're going to build, I could have that wrong, but I believe is bringing in ZK Snark and bringing in privacy to their platform. So
okay.
I know EOS isn't probably your favorite, I've heard, but and they're a bit of a shit show too.
Yeah, I'm just not as familiar with them, especially in terms of everything that goes on. I just, but it's like you always just get to hear about how much money they raised. But
yeah, they have integrity issues, and we'll see where they go. But they've got a $4 billion balance sheet, and so
yeah,
they've got money.
You could solve a lot of things with that.
How
A lot
about
of
that?
problems.
We haven't had an episode since that got announced. I was pretty amazed at how little that was relative to how much they raised.
Yeah.
That was a slap on the wrist.
Yeah. So, but I don't know. We'll see. They've got some gaming and interesting, not gambling, but like gaming projects coming out. They've got voice.com. I have no idea if that'll be, if a blockchain private social network will take off or not. But, they do have some, a lot of projects that, we'll see.
Yeah.
Yeah, I mean, they just have a lot of cash to work with too. It's like,
That's the thing, right? They can fund so many different stuff, and so many different projects that are starting up on their chain. If they want, they can help out. It's just, the resources, it's huge.
Yeah.
Yeah, so that about wraps up our time today. But is there anything you want to leave with everybody where they can find out more information about you?
Yeah, sure. I mean, I do a lot of long form writing on Hacker Noon or Medium. I think I'm at Jake_Ryan. You can find me on Twitter at Tradecraft Jake. Either of those two places.
Awesome. Thanks again, man.
Thank you.
Awesome. Thanks, guys.
All righty. We'll see everybody later. Take care.
Take care.